Hey everyone, Lance Pluto here with the Future of Wealth. Today, it's painful. I'm going to talk about the worst trade I had recently. This was back in May. It broke my heart and it broke my account badly. But maybe it'll be some good therapy. Let me go over it. I usually don't share this kind of stuff, so you're hearing it first. Now, the stock was Zayo. It's a telecommunications company. I think they did the whole 5G fiber optic era, and the stock, well, it took a hit and then it made a recovery, and I actually lost money on call options when the stock went up on a buyout. It's like a triple whammy of a loser. Ugh. So here's the chart. Here's a weekly chart. The stock was around 40 bucks a share, 39 change, then it tanked. So this is what happened. I actually bought call options on the stock after earnings. So it had an earnings report back in November. The stock took a big hit. It tanked from 30 down here to about 22 a share. So I actually bought calls down in here around 23 a share. And literally within days, I made about 700% return. So I was feeling great at that time. I was like, wow, Zayo, this is my new stock. Never even traded it before, but I was like, this is my new stock. I love it. Then the stock went lower, and I bought calls again around the same price level, around 23 a share. The stock, within a matter of weeks, was not only grinding higher, but it had news, and it popped to literally like 28. So I made money on these options. I think I made about 500% from here to here. So I, again, was crushing it. And when I'm feeling good and I had confidence in the stock back then, I started to up my position size. So I started to get a little cocky, saying, oh man, this is my stock. I started to buy larger size, so more and more call options. Then, up in here around 26 a share, I started to buy calls. And the stock was going lower and lower. And I was adding to my call options. So let's say I bought them for $1. I would add at 70, I'd add at 50, I'd add at 30, and I just kept adding. And then the stock had more news on a buyout rumor. And the calls, they went up again. So I was up another 300-400% on the calls. So now I was feeling fantastic, like, wow, the stock's gonna get bought out. It started to grind higher. So what did I do? I was buying more call options. I mean, literally, you name it. Every time the stock had a red day, I'd buy more and more and more. Now here's the part where I got in trouble. When a name has a buyout looming and the street knows about it and your aunt and uncle know about it and your cousin Joe knows about it and everyone thinks that the stock is going to go higher, the market makers, the boys and girls who control the options, they jack up what we call implied volatility. In fact, let me see if I can even pull implied volatility up just to show you. Give me 1 second here. Watch this. This is what we call an IV crush. And if you're an option buyer, it's painful. So here's actually implied volatility. This is the volume spike when the stock did have a buyout. Look what happened to the volatility. It got crushed. So this is what happened. Oh, this is painful. So I bought the June 32 and a half calls. Now remember, the stock was probably around 31 a share. So I bought the 32 and a half calls for June. They were, get this, $1.70-ish, okay? So my break even on these call options with the stock around 31 a share, the 32 and a half calls were $1.70. My break even on these calls was $33.70. So I figured if the stock got bought out at 35 a share, like everyone thought, including me, these calls would be $2.50 at least. What if the stock traded higher than the buyout price? That would be great. Well, the good news is this. The stock did get bought out at 35 a share, so I was right. But here's the bad news. The stock only traded the day after at 33. So those call options that I bought, and I had a boatload of them, because I was right 3 times before in the stock. I was long a boatload of calls. I bought at 170. Some I bought less, some actually I bought more. They were 50 cents. So they were slashed in value. And my account tanked. My position tanked because I was so cocky, that they were going to get bought out. And I was right, but they didn't trade to 35 a share. So that's what happens. Usually when a stock gets bought out, there's usually time. These mergers have to go through, so the stock won't trade at that buyout price. It's almost, think of it when you buy, let's say, call options ahead of earnings, and the stock goes up, but it doesn't go up a crazy amount. You still lose money because the IV got crushed. So to wrap up the video, don't be cocky when you're trading. Even if you've been right before, always know your risk. Never, ever, ever oversize a position. Know your maximum loss on the trade. So even though I was right, I still lost money. And it hurt me. Not that, I was wrong and dang, I suck. It hurt me because I made my position way too large. And that's why, too, I don't like buying expensive options. A $1.70 option to me that's out the money, that's expensive. What was the best thing I was hoping for those calls to go to 250? That's not a good risk versus reward out there. Let me know. And I know this may sound bad, but it's actually good therapy to talk about your losers, to learn to overcome what you can do to fix your trading. Let me know what position with stock you had a large, maybe a devastating trade on. That way, we can work together, we can overcome it, and most of all, move on. This stock, Zio, I haven't looked at it since the bad trade, since I lost all that money on it. And to be honest with you, I have no desire to look at it anymore. I removed it from my watch list. I pulled it up on a chart for this video, and now I am going to erase this and go back to a normal chart and never look at Zio again. Thanks everyone, look forward to your comments.